Let's talk about what's happening out there. We're looking at a market that's roaring. The S&P 500 is flirting with all-time highs, and it feels like the party is in full swing. Money is flowing, stocks are climbing, and everyone feels like a genius. When things are this good, it's easy to get swept up in the excitement. You see a stock blasting off and you think, I gotta get a piece of that action. But hold on a second. This is the exact moment when you need to be smarter than the crowd. The temptation to chase the hottest, most speculative names is huge, but that's a rookie mistake. That's how you get your head handed to you. Now, I'm not telling you to run for the hills and stuff your money under the mattress. No way. That's a loser's game. Inflation will eat that cash alive. What I'm telling you is to be strategic. When the market is this high, you have to be selective. You can't just throw darts at a board and hope for a winner. You need a game plan. You need to look for quality. You need companies with real earnings, real cash flow, and a real commitment to their shareholders. These are the businesses that can withstand the inevitable bumps in the road. Because, make no mistake, the market never goes up in a straight line forever. There will be pullbacks, there will be corrections. And when that happens, you want to own stocks that won't crumble like a paper bag in a hurricane. If you're enjoying this breakdown, hit that like button and subscribe for more smart investing tips. Think of dividend stocks as the all-weather tires on your investment vehicle. When the sun is shining and the road is clear, they get you where you need to go. But when the rain starts pouring and the road gets slick, they provide the grip you need to stay in control. Dividends are real cash payments companies send directly to you, their shareholder. Alright, let's get to the first name on our shopping list. This one is a monster, a titan. I'm talking about Microsoft. You might think of Microsoft as a growth stock, and you'd be right. This company is at the forefront of the biggest technological revolutions of our time. Cloud computing with its Azure platform, artificial intelligence, gaming with Xbox, professional networking with LinkedIn. It's a growth machine, plain and simple. But here's the beautiful part that many people miss. Microsoft is also a dividend-paying powerhouse. It's the perfect blend of growth and income, a rare combination that should make every investor sit up and take notice. Because Microsoft has its tentacles in everything that matters. Its Azure cloud business is a juggernaut, competing head-to-head with Amazon Web Services. Then there's its software business, Windows Office, which is like an annuity. It's a subscription model that generates a predictable, recurring river of cash quarter after quarter. This isn't some flimsy story stock. This is a fortress with a balance sheet made of granite. The company is sitting on a mountain of cash. They generate so much money they literally don't know what to do with it all. That's a high-class problem to have. They have a long history of raising their dividend every single year. This is a core holding, a cornerstone for any serious investor's portfolio. Now for a name that might not be on your radar, but it absolutely should be. Brookfield Asset Management. Listen up, because this one is a gem. They are one of the largest alternative asset managers in the world. They own and operate the essential hard assets that make the global economy run: hydroelectric dam, pipeline, toll road, port, data center, prime real estate. These are massive, long-life assets that generate steady, predictable cash flows, often indexed to inflation. This is the ultimate real stuff company. In a world of uncertainty, these tangible assets are a rock of stability. They are not going to be disrupted by the latest tech fad. People and businesses will always need electricity. They will always need to transport goods. And they will always need data infrastructure. Brookfield is the landlord to the global economy, and they collect rent in the form of stable, long-term contracts. This business model is incredibly resilient. It's built to withstand economic cycles. When inflation is high, their revenues often go up. Brookfield is a master capital allocator, finding undervalued assets, improving them, selling them for a profit, and collecting fees for managing them. They have a phenomenal track record delivering strong returns decade after decade, recycling capital into high-growth areas like renewable energy and digital infrastructure. This isn't a sleepy, static company. It's a dynamic machine always hunting the next opportunity. They're playing chess while others play checkers. This is a stock for the thinking investor. Don't miss out on this one. Okay, let's shift gears to a name everyone knows, but many have counted out. I'm talking about Verizon. Now I know what you're thinking. Kramer, isn't telecom a boring, slow-growth industry? And you're not wrong. The stock has been a dog for a while. It's been beaten down, left for dead. But that, my friends, is where we find opportunity. This is a classic comeback story in the making. Verizon is a giant in the United States wireless market, an industry with only 3 major players. This is an oligopoly, And that means pricing power and massive barriers to entry. You can't just wake up tomorrow and decide to build a national 5G network. The reason to look at Verizon right now is simple. That dividend yield is screaming at you. It's one of the highest yields you'll find in the S&P 500 from a blue-chip company. For years, the market has been worried about Verizon's debt and its capital spending on the 5G rollout. But we are now past the peak of that spending cycle. The heavy lifting is done, the network is built, now it's time to reap the rewards. Cash flow is set to improve dramatically, which makes that juicy dividend not just safe, but secure. This isn't a yield trap, it's a yield opportunity. The stock is trading at a valuation that is dirt cheap compared to the rest of the market. That is an incredible bargain for a company that provides an essential service that people cannot live without. People will give up almost anything before they give up their smartphone and their internet connection. This creates a highly predictable and stable revenue stream. Verizon has a massive, loyal customer base that pays their bill every single month. Buying Verizon today is a contrarian play. You get a massive dividend yield and the potential for capital appreciation. That's a 1-2 punch that can knock it out of the park. Let's head over to the retail sector, a place that can be a minefield for investors. But amidst the chaos, there's a champion. A retailer that has figured out the secret sauce for the modern era. I'm talking about Target. This isn't just another big box store. Target has transformed itself into a multi-channel powerhouse, seamlessly blending its physical stores with a best-in-class digital experience. They have mastered the art of omni-channel retail. You can buy online and pick it up in the store. You can use their drive-up service without even leaving your car, or you can have it delivered to your door with Shipt. They meet the customer wherever they are. The reason Target is a compelling buy now is because it has proven its resilience. The past couple of years have been tough for retail, with supply chain chaos and shifting consumer spending habits. Target took some hits, no doubt about it. They had inventory issues and the stock got punished. But what did they do? They took their medicine. They cleared out the excess inventory and refocused on their strengths, offering a curated mix of stylish merchandise, affordable merchandise, that people actually want to buy. Now, let's talk about the dividend. This is where Target truly shines. This company is a dividend king. That's not a term I throw around lightly. It means they have increased their dividend for over 50 consecutive years. 50 years. Through recessions, market crashes, oil shocks, and a pandemic, Target has consistently raised its payout to shareholders. That is an unbelievable track record of financial strength and management discipline. It tells you that this is a company built for the long haul. That's a bullseye for any income portfolio. Last but certainly not least, we have an absolute fortress, a company whose products are likely in your bathroom, your kitchen, your laundry room right now. I'm talking about the one and only Procter Gamble. This is the definition of a blue-chip consumer staples giant. They own an arsenal of iconic brands that are household names around the globe. Tidecrest, Pampers, Gillette, Charmin. These are products that people buy over and over again, in good times and in bad. They are essential. They are non-negotiable. This creates a business that is incredibly stable, predictable, and recession-resistant. Why is PG a must-own stock? Because of its sheer dominance and pricing power. When costs go up, Procter & Gamble can pass those costs along to the consumer because people are loyal to their brands. Are you going to switch from Tide to some unknown detergent to save a few cents? Probably not. This brand loyalty gives PG a powerful moat that protects its profits from competitors. They are a toll booth on daily life. They are constantly innovating and spending billions on advertising. It is, in a word, legendary. Procter & Gamble is another dividend king, but they are in a league of their own. They have paid a dividend for over 130 years and have increased that dividend for more than 65 consecutive years. Read that again. This track record is a testament to the enduring power of their business model. This is the ultimate sleep well at night stock. You know that no matter what is happening in the world, people are still going to be brushing their teeth and washing their clothes, and PG is going to be collecting the cash and sending a piece of it to you. Adding Procter & Gamble to your portfolio is like adding a granite foundation. So, there you have it. 5 absolute champions. Microsoft, Brookfield, Verizon, Target, Procter & Gamble. This isn't just a random list of stocks. This is a diversified, hand-picked portfolio designed to give you multiple ways to win. Think of it like building a championship team. You don't want a team of just home run hitters. You need great defense. You need solid pitching. You need clutch players who can deliver in any situation. Microsoft is your power hitter, driving growth. Brookfield is your gold glove defender providing stability. Procter Gamble is your gold glove defender providing inflation protection. Target is your all-star who can hit for average and power, blending growth with a fantastic dividend track record. And Verizon? Verizon is your veteran relief pitcher, coming in to lock down the game with a high-yield performance when you need it most. The key here is diversification. We have exposure to technology, real assets, telecommunications, retail, and consumer staples. This blend of sectors helps to smooth out the ride. It's about being smart, not just lucky. This is how you move from being a speculator to being a true investor. You must do your homework. Your financial situation is unique, but this is a fantastic shopping list. Forget the meme stocks. Forget the get-rich-quick schemes. Focus on quality. Stay calm. Be disciplined. Do your homework. And most importantly, stay invested. Building wealth is a marathon, not a sprint. By focusing on dividend-paying champions, you are giving yourself the peace of mind to enjoy the journey. Now go out there and make some money. If you found this helpful, share it with a friend and let us know your favorite dividend stock in the comments below.